Well, hello again, everyone. Welcome to the Options Mentor. Well, we had a real nice week using our calendar, double calendar spread. Worked out well. I took it off on Friday myself. It did very well. And you know what? I know you guys are tired of hearing about it, but let's take a look at this right here. I will show you. The VIX is so low. If you loved it last week, I think it was a 13 something. You got to really love it this week. We're down here in the 12s. By the way, look here. We haven't been here since before the whole COVID dust up back in 2020. A long time since we've had this low of volatility. Yes, it could go lower, but I really think we're probably plumbing the depths of where volatility really can go in a market that still is, thinking about the rate hikes, trying to believe they're over, even though they keep reinforcing they're not. Necessarily they're on the table. And so I don't think VIX will go a whole lot lower because of that concern. Not only that, just a little bit of future thing here. We got a presidential election coming up next year, and a market probably will have some volatility with that anyway. So I think, hate to sound like a broken record, but if a broken record's working and making good music like the double calendar is, I think you have to keep with it. And so let's deal with that. Let's go over here and we will look at another double counter if I can get my software to switch to SPX, which it does not appear to want to do. That's the way it works. We'll try it again. All right, now we're over there. And if we go over there, what I think we ought to do is go out to not this Friday, but a week from Friday, the 15th. And so it gives us a little more time, generally a little more volatility exposure whenever your long options are out even further in time, which of course they would be. And not only that, go 4 days wide. So instead of selling Friday, buying Monday, we're going to sell Friday and buy Tuesday. In this case, selling the 15th, buying the 19th. And I just modeled here a 45, 40, 46.30. Now this is obviously based off of what it looks like we closed at 45.94. Something like that. I don't know where we're going to open tomorrow, but as long as we don't have some 60, 80 up move or down move, well, actually down move, we'd probably hold off. If we had a 60 or 80 point up move, one would presume volatility would go even lower. I would probably wait until late in the session and put this trade on anyway. And what I would do is probably get like 35 points, 40 points up and down, and then below it with the put calendar. And you have on your double, got lots of room here. And if you look at it here, once again, we should be out of this by this coming Friday, which would be before expiration, right? Way before, because that's a week before expiration. And this trade would cost us a little over $600, $650 or so. And, so that actually means per spread, you're looking for, even with fees, probably $75. Looks like we may even be there. Even if volatility didn't help us, we could probably easily be there by the 6th, which is Wednesday. Now, I looked at the news also. There's not all that much big news. We do have the non-farm payrolls unemployment rate this coming Friday, but I didn't see anything too huge, a PPI. There were no Fed speakers listed yet on the calendar. I don't know if there will be any this week. So I don't see any huge news event coming this week, which should make this, I think, an even more peaceful trade. And, if we do get some news, hopefully it'll be something that kicks volatility up a little bit, which will make us look even better in our long Vega trade. All right. So if you happen to get up in here, maybe 46.50, if you had this on about halfway between your short strike and break even, wherever you are, just take off the lower calendar and stick with the single, work it out from there. Same thing down, get down in here, take off the upper. So we're going to start with the double, hopefully take the double off by Thursday or Friday profitably, maybe even Wednesday. And if we have to, if we get some big movement, once you have it on, you can always go back to a single. So that's how I would manage this trade, trying to get 8 or 10% per spread and get out. Simple as that. It's not a bad thing if you can do that in 5 days, is it? All right. Well, I thank you once again for subscribing to my channel. Please tell all your friends to like the videos, keep up with the comments. I just answered a bunch of those today. So I like to see those. I like to answer those. And as always, check us out over at SheridanMentoring.com. We're there every day teaching options. So I will talk with you all next week. Good luck with this trade again if you choose to do it. And I really think we should have a fairly peaceful week. But let's see what happens. And I'll be with you again next Sunday. Have a great one. Bye-bye.